This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm Melisa Moretti.
And Melisa, today we have a great guest, someone I can definitely call a good friend, Lawrence Green, president of Spire Development Corporation. We've had the pleasure at William Wright Commercial working with him and his group for quite some time here. We've watched them grow and expand tremendously. And he joins us today on the program to talk everything around BC, markets they like, the construction industry. He also goes into a new venture that they have and talks about sort of investment opportunities in that side of the business, on the financing side of the development side, which some people may or may not know exist. But overall, great episode. Unveils a lot of stuff, shares a lot of knowledge with us. Definitely a must listen to.
Lots of really good information here.
And the one thing too that I love at the end of it, and you have to hear it, he takes his kids to some awesome concerts and they get to meet the band. I'm jealous of his kids. Who they got to meet in the last one?
To be honest, I don't even know who these bands are.
Well, that's the problem is, Melisa, you're probably 22, and a lot of these bands here were probably, these were back in like our parents' days with the old 80s metal bands and the long hair. So maybe a little bit before your time.
I'm going to look them up. I'll look them up.
But if you are looking for a good band, I always highly recommend Nickelback. They're kind of around the same area, so you can always, why the sad face? Always ruining my day. But one thing I did want to touch a little bit about, saw the March stats, kind of came out in real estate on the residential side.
Yeah.
Obviously, that's a clear indication of kind of what happens across the real estate market, period, affects the commercial side.
Yeah.
Things seem to be going in the right direction. What are you guys seeing?
Things are picking up. Absolutely. You're seeing a lot more urgency on the part of buyers. Not as much inventory, that's for sure. We're seeing sellers still holding off a little bit. And so that's creating a little bit of panic in some areas for buyers.
So is that what's driving it now? Lack of inventory, although we still have not record setting, but extremely high interest rates. Is it lack of inventory is why people are having to get up and go?
I think there's a lack of inventory. That's part of it. I think the certainty around interest rates or appearance of some certainty.
Yeah.
Maybe the interest rates are coming down this year or early next year. People are feeling a little more confident and they're thinking this is maybe their opportunity to get in there. And you're seeing that kind of across the board. So
now, is it market specific that the activity is happening, or is it just kind of a blanket across the lower mainland? Lack of inventory is driving everything.
Yeah, I would say that's a big part of it.
So guys, without further ado, let's get to our interview today with Lawrence Green, president of Spire Development Corporation and the Spire Group of Companies.
All right, let's go.
This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial. And we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes to under the commercial umbrella. You're building a building and development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca. And we should say, over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion. All right, we're here today with Lawrence Green, president of Spire Development Corporation. Lawrence, how you doing?
I'm great. How are you, Cory?
Good, Lawrence. Thanks so much for taking the time to join us today. Can you maybe tell our listeners a little bit more about yourself and Spire?
Spire Development Corporation was co-founded with my business partner, Pete Rakow, about 17 years ago. We were working together for a Western Canadian developer based out of Calgary. And prior to that, I had a long brokerage career in the commercial real estate industry with Colliers and Cushman and Wakefield. Always had the desire to sort of start our own or, my own thing. And one thing led to another. And when I met Pete, so my experience and my background is basically deal negotiating, financing, deal structure, And, our roots were sort of based in the industrial market. I met Pete. Pete was at a company called Opus that I mentioned before, which is a Calgary-based developer, and he was physically building the buildings for Opus. And when we met, we just became fast friends and knew that we'd have a partnership and great life together, hanging out and having fun and doing some deals along the way. So when we married the two skill sets, it really sort of gives us the diversity and the experience to go from, a meeting or an interview like this to, a set of keys for, ourselves or one of our clients at the end of the day. We sort of cover every aspect of development and construction from, concept, design, fitting the building on the site, zoning analysis, and then we've got, everything in-house. So it's kind of a one-stop shop. We have marketing, design, construction. We've recently added a finance side to the business. So it really is a one-stop shop for, turnkey type projects and that sort of thing for ourselves or for our clients. And I think it just really, adds to, the stability of, real estate's a risky, despite what people might think over the last couple of years. Real estate is a risky game and there's a lot of things that can go wrong. And, handling all sides of the equation from, design and deal structure and execution to the physical construction and controlling that process on site really just adds to the certainty of success with our projects. And rather than being a normal developer who, goes out and hires a third-party contractor, third-party architect, and has no control really over the situation. So we control every asset or every part of the asset, construction and design, and then implementation.
So from Spire's perspective, you can do it on behalf of a client. Does Spire also acquire their own land, develop, build, and sell or maintain assets, as well as working for clients in the third party?
We do. Typically, third-party stuff, we are very selective on who we deal with. Typically, it's either, referral-based or having done previous work with these groups. We typically don't do bid and tender work because it seems to be a bit of a race to the bottom and a more adversarial process than, us controlling the process for our client and our client having one single point of contact that manages the whole process. And then, so that makes things a lot more efficient and a lot easier for the client, especially, not too dissimilar to residential. Most of the people that are buying projects are building a building for the first time, and it might be the only time they ever do it. So having that experience and the ability to take it from a concept to completion as smoothly as possible is a big benefit for our clients. And then, so we try and acquire as much property as we can and hold on to it. Unfortunately, it's a very cash and equity intensive business. So we hold what we can, and then other stuff we become more merchant and design, develop, and sell into the marketplace or lease into the marketplace and then sell the asset after that. So it was really a mixture of it. And, we hold retail assets, we've held mini storage, residential rental, different asset classes like that. And so depending on the deal, what's going on in the market and, our ability to park some capital, it really just that sort of dictates, whether we're selling into the market or holding.
So you obviously through this business, you've been on the forefront of commercial real estate for quite some time here now. You guys have been very successful along the way. Can you maybe tell us a little bit about markets that you guys are excited about or stuff that you're looking to acquire in and why?
Yeah, so traditionally, we've been a Lower Mainland developer and builder. And with the scarcity of industrial land, the cost of land in the Lower Mainland, the time frame that it takes to get a building permit, even on a permitted or on a zone site, the costs are just so high. And sadly, those costs, end up getting passed on to the end consumer. So what we've done is, we've looked at, typically our deal structure and our business structure has led us into outlying markets. And so we've done half a dozen projects with a company called Prairie Coast Equipment. They're a John Deere dealer with multiple locations. And that relationship and that trust in business has led us into markets like Kamloops. We've looked in Prince George with them. We have done deals in Chilliwack with them and all those sorts of markets. And so that client leading the charge and having us there responsible for developing their projects has got us into markets. And Chilliwack's an excellent example where, we built a $10 million facility for John Deere, and we got plans and permits and the go ahead within, I want to say it was like 10 weeks, for a zoned piece of land in the industrial park. So that became something very attractive to Pete and I. We started looking around in the Chilliwack area and, have acquired a regional shopping center out there, which we sort of have re-tenanted with our deal experience and our tenant experience. We re-tenanted that, built a few more buildings, and we hold that asset today. I think we acquired that in 2015, and we still have that asset today. And so that's really how we've gotten into some of these markets. We've built in Calgary, Edmonton, on the island, Chilliwack, Fort St. John, Kamloops, Kelowna. So we actually quite enjoy the out of town work and going out there with our clients and exploring new markets. We have a desire to acquire more out there, and it's much, much easier, I will say, to get a project off the ground and standing than it is in sort of the lower mainland with all of the political and geographic constraints and all that sort of stuff.
So you mentioned there the regional mall you guys have out there in Chilliwack, and obviously Chilliwack's a market we talk a lot about here in the Fraser Valley area and stuff. Can you maybe walk us through how that you've seen that market change firsthand, say from 2015 to 2000 today, with everything from vacancy rates to maybe lease rates, and how you've seen that market mature and grow?
Yeah, it's funny when we acquired that asset in 2015. It almost been like it was in a different province, just with the distance from the lower mainland. And that's really how local guys were looking at it. It might as well be in Alberta. So when we got into that asset, though, we were looking at it and saying, there's some vacancy issues because, it's difficult to find service providers out there, whether it's trades that we know and trust or, commercial real estate advice. It's always sort of been a market that's a little bit too far out for most of the big firms. So we thought that's got to be an opportunity because, all of the big players, have to be in that market. It's a growing market, with the addition of Molson's out there. Most recently, Red Bull has acquired some land out there, and they are going to be building a big facility out there, which is their only one outside of Austria, which is my understanding. And it's really just the fundamentals of those markets. Like rents were undervalued for, what they need to be. You've got an overly, easy and pleasant place to do business. The attitude out there is pro-business from the staff and people that work out there to, the people that make decisions in City Hall. So that's been a real pleasurable experience. And then, with cap rate compression that's gone on, the ALRs, we all know, and the borders and the mountains and all those things are putting restrictions on, developable and usable land. And when you get into retail and industrial, you need quite a bit of land. So those larger parcels become harder and harder to come by, and a great way to hold land and get paid while you do it.
So now one thing we ask a lot of people who have been in the retail sector, and obviously COVID was crept up on it. Did you guys find maybe a market like Chilliwack exceptionally more challenging maybe than some of the other markets on the retail side of things? Or was Chilliwack a market maybe didn't experience the same tragedy like a downtown Vancouver did when everyone left the offices and never came back, it felt like?
Yeah, it's interesting. I would say it was the latter. Like, there is that real sort of, pro business and pro work attitude in Chilliwack. And, in our mall, it's 80,000 square feet, a multitude of buildings. So we have a BMO, a Tim Hortons, a Shoppers, Dollarama, some government tenants in the office, and daycare, that's been very, very successful. So, we've got, we haven't got a big grocery anchor, but we've got, some very big names anchoring the mall. And we, with the exception of a gym, had no real issues with our tenants. We did do, quite a bit of work with them. some of the restaurants obviously are having a tougher time. And so we were working with them in different ways to sort of keep revenue going and that. But through that whole process, we only had really the gym that, unfortunately didn't make it. But, just their business type alone, I mean, it's, through a situation like COVID is, I don't know how they survived, right? The ones that have, I mean, they've done an incredible job of getting creative and staying afloat during a tough time when you can't congregate.
Is Chilliwack a market you guys are still excited about? If there was other acquisition opportunities in that market, would you look to grow that portfolio, or do you feel that area is kind of matured and things like Vancouver Island and the BC Interior you mentioned that are more palatable from a cost and economic standpoint?
We're looking at a couple of projects out there right now, and even our current mall, Better Point, we're zoned for, I believe it's 80 or 88 residential rental units on there. So we're continuing to sort of work through that as well to sort of see how we can continue to improve the mall and maximize the asset's value. We're big believers in the Chilliwack market, and it's weird. Land is getting scarce there, as well. You'd think the further you go out, the more land would be available, but that's not really the case in sort of the lower mainland. So Chilliwack is definitely on the radar, as are some of the other markets, as you mentioned, Kamloops and Kelowna. Kelowna, I think, we'll see how that, sort of filters out, whether that cools off a little bit. That market was on fire for, a couple of years there that, it was just going at a pace that was incredible. And so, we started to look around. As I mentioned, we've got a couple of deals we're doing on the island. Those markets have been very good to us as well. Smaller deals, which are things that I think you have to sort of factor in and readjust your expectations on return, because, it does take just as much effort to do a small deal as it does a big one. And the numbers or the percentage returns, while they may be the same, the dollar amount for the effort and that sort of thing is different, obviously.
So most developers, as you guys probably saw in the forefront, had challenges during COVID with regards to pricing, with regards to construction costs. How did that pivot your business model in any way? And do you anticipate maybe some of these prices that we saw seem like they've peaked and they've come off at? Do you anticipate maybe those construction costs to continue to come off, or are we kind of plateauing now that this is just the new model moving forward?
Well, I'm hopeful, I think, like everyone else, that we'll see some price reductions on the cost side of building. But logically, sort of when I look through it, and, if you just take a look at concrete and rebar and steel and labor, just with the amount of, infrastructure projects that are going on in the lower mainland, the demand on those, just those little handful of components that go into the, large components that go into the construction side of things, I just don't see the pressure coming off on those. Broadway, you look at the Broadway corridor, some of the bridges and hospitals, and, through COVID, we lost, quite a few senior people that, are experienced tradespeople, craftsmen at what they do. And, there's just not enough people coming up through the ranks, fast enough to keep up with the demand that's going on. And, when you look at the demands on housing, and if we can't get supply to the market, we're always going to have these difficulties in creating homes for people. And if we have demand for homes, then the supply side to create those homes wood, steel, concrete, people, that demand is going to be high as well. So, I think until we sort of fix the huge gap in the number of homes that need to be created for people, we're still going to have those serious pressures on, not only the end product, but all the products it takes to get the product built.
Before we hit record today, you mentioned about how Spire Developments has grown into the Spire group of companies and the evolution of that over the past 17 years. Can you maybe just touch base a little bit on what else you guys have going on?
Sure. So within the Spire group of companies, we have the main ones are Spire Development Corporation, Spire Construction, and most recently Spire Pacific Capital. So Spire Development is basically a pure development company that acquires opportunities and, builds those out or repositions them for sale, or income within the group to hold on a longer basis and a longer period of time. Spire Construction, obviously, construction company where we have all our own trades or all our own labor force, from project managers, on-site superintendents, carpenters, laborers, all that sort of stuff. So basically, Spire Construction contracts with the various development companies under the Spire Development program. And then most recently, what we've done is, so there's probably about 40 companies within the corporate tree and that sort of thing right now. And so most recently, we've added Spire Pacific Capital. And Spire Pacific Capital is a vehicle for raising funds and deploying funds into first, second mortgages, maybe some bridge financing and those sorts of things. So we created Spire Pacific Capital for a number of reasons. One, it's always been on the radar, because when we started out, we didn't have any money, so we had to raise money to get the equity to build out our projects. And then as we started going through it, when we would need to top up on some of our financing, for example, so if we were going to develop an industrial building and one of the traditional Schedule A banks or one of the credit unions would lend us 55, 65% on a land acquisition, and we wanted to build it out, but needed a little extra financing to get us through the planning, design stage, et cetera, before we got into construction financing, we'd typically go out to a private lender, borrow capital, and get us through that process. So fortunately or unfortunately, over the years, Pete and I have borrowed so much money to get these projects up and down, we thought, hey, why don't we do this ourselves? Much like we got into the mini storage business as well that way. But so we had Chris Enns join us from Kingset Capital. And so the three of us are partners in Spire Pacific Capital, and we raise funds, either putting in our own funds or raise funds through family and friends to invest in other development projects and construction projects that are going on in the Lower Mainland. So recently, we've seen with interest rates rise the way they have, there's a huge delta between what traditional banks are lending and what developers now need for equity and cash into a deal. So we've been sort of analyzing those opportunities, and we've got tens of millions of dollars out right now and that sort of thing. And the plan is to grow that business and make it as big or bigger than the other two sides of the current Spire group of companies.
So you touched base there on just how the equity game has changed with regards to a developer. You've obviously seen all aspects of the deal, from the brokerage side to the finance, now the development side. For our listeners, can you maybe just give us maybe a very high level? How does an equity deal work for a developer? A lot of people, obviously, that listen to this program probably see these big towers going up and assume that that there's one guy signing all the checks who's got billions of dollars in the bank. Can you maybe just on a high level sort of break down what a typical development financing may look like from a developer perspective?
Sure. I mean, there's a few of those guys in Vancouver's, got a few of them running around that, can do that. I certainly am not one, and I don't want to speak for Pete, but, we typically, like most developers, I think what people don't really understand is private equity in the real estate business is a massive component of what's going on. And traditionally, that's been sort of a little more, it's been a little bit tougher to get into. And what we've thought is, this is another way for people to invest money, extra cash that they have, see different returns than they probably would investing in traditional markets, whether they're buying, mutual funds or directly buying stocks or whatever the case may be. We typically structure our deals on a sort of, I guess the shortest amount of time we've lent is 6 months, and the longest we try and do is about 24. And the idea behind that is twofold. A, it keeps pressure on the developer to keep the process moving, and B, it's generally, you can sort of crystal ball out there a little bit on, if you're going out 24 months, you start getting out further than 24 months and everybody starts to worry a little bit about what's happening. Is there going to be a change in the market, change politically, et cetera, et cetera. So we try and keep these deals as short as we can. the beauty of them really is they're secured by real estate that we would want to own ourselves if something unfortunately were to go wrong. And I think the most unique feature about Spire Pacific Capital versus anybody else in the space is that we're owners and builders of real estate as well as lenders. So traditionally, people in this space would be relying on market data that's maybe a bit older, quantity surveyor reports, et cetera, to justify or to prove out all the information that the developer would bring when he's requesting a loan. The reality of our situation is we're building projects every day, so we understand costs better than any bank because we're the guys actually in there doing it every day and paying the bills to get those things done. So when we have a sponsor come and ask us to lend them some money and we look at their pro forma, the first things we can pick out are construction costs, time frame, all the different things that go into getting a site permitted, all of these things that the average person who's not active in the space every day could possibly know. So that adds a huge amount of security to our investments that like I said, other people in the space just can't provide. And then typically with these things, you're pre-funding your interest. So for example, if you were to lend somebody $1 million and your interest rate on the mortgage is 10%, the borrower would actually only receive $900,000, and we pre-fund our interest, the $100,000 for a year, into a separate account. So, and that money gets distributed on a monthly basis to the investors so that they receive their return right away. It's a really safe way of investing in real estate. It's quick, you're in and out, and unlike the regular development process and that. So how we get out is basically when the sponsor receives permits or kicks off construction, gets construction financing, and we get paid out and traditional construction financing goes in.
So from a developer standpoint, and that I'm guessing that's primarily the target sponsor you guys are looking for through Spire Pacific Capital. If the advance is $900,000 versus the $1 million loan, is that developer then paying monthly interest installments, or they've already prepaid it with the $100,000, which is held back on the interest payments?
Correct. It's the latter. So that way, the developer doesn't have to make monthly payments. They're essentially prepaid, if you will. And the investor doesn't need to worry because, his interest is tucked away in a separate account that, we draw on a monthly basis.
So obviously you've seen, like I said, we touched base earlier, the broker side, you've seen the construction, the development side here. So I'm going to ask you to pull out your crystal ball. And just so you know, Lawrence, anything you say here, we will hold you to, no questions asked. Where do you think the market's going? Obviously right now we still have high inflation numbers. Interest rates have still managed to stay relatively high or extremely high. We've had the American banking sector down south kind of go a little wayward that may cause some issues. Where do you think BC real estate goes over the next, say 12 to 24 months, and why?
Yeah, so I think on a purely macro basis, if you look at the numbers with the amount of people that are projected to come to, Canada, and, most of those people are going to want to end up in either, Vancouver or Toronto. You look at the housing shortage we have here, industrial land shortage we have here, even retail, regional, as much as retail has changed, getting your hands on land in the Lower Mainland is brutally difficult and extremely competitive. So, I think as long as those metrics exist, there's going to be, at least gentle upward pressure on, land, construction costs, the end product, et cetera. When I look back, I've been doing this a long time. And, when I look back at my sales career as a commercial broker, where, people would buy residential rental projects that are, negative leverage. So basically with negative leverage, you might be buying at a 3 cap, but your interest rate is 4 or 5. So that just means you got to put more money into the deal, more equity into the deal. So, traditionally those have been like the bond component of your real estate portfolio. Like if you own a little bit of every asset class, residential rental will be your hedge against inflation. It'll be your bond or your money in the bank type scenario. Whereas if you're, buying something a little bit more sporty, you need spread on your interest rate and on your cash flow coming in. So I think personally myself, if you look at where we've come from with the interest rate environment we were in, that was really the anomaly. I think we're into a more normal interest rate environment than we have been. And I think that, that low interest rate environment has caused a huge amount of the frenzy and a huge amount of the inflation that's happened because, when somebody's pro forma or somebody's business plan doesn't include financing or the cost and risk of debt as a serious, component to that decision, then, there's a problem. And I think that's where we've come from, is that money was free and easy. And, the party's over on that side of it. And so I think we're into a little bit more balanced and normal interest rate environment right now. I hope that we see stability on the 12th. And, the Bank of Canada holds our rate. But, we still see the government's, stimulating the market with free money and opportunities and spending money. And if we're going to get inflation under control, we got to stop spending money. That's the bottom line.
It's almost counterintuitive. If they seem to lower rates too fast, all of a sudden now you're just kind of like fueling an inflation issue. Housing prices get pushed up, and then they probably have to relook at, fast forward 6 or 12 months, relook at interest rates again, thinking, oh my gosh, we've almost counterintuitive ourselves in what we're trying to do here.
Absolutely. I think too, the other thing is, the government let this run out of control. I don't know how you have a target of 2 to 3% on inflation and then you let it run rampant into the high single digit numbers, which is the numbers they were telling us. And quite frankly, I think it's, in all practical, real terms as a consumer, I think rates were easily into the double digits, inflation rates. And so, the government was stimulating the economy, like crazy, free money, all this sort of stuff. And, it got out of hand. And so I know lots of people have made some pretty big bets because that, again, interest rates were supposed to stay low. And then here we are, we've seen, if not the largest increase in prime rate in history, one of them for sure. And so quickly.
Yeah.
So it catches people off guard. There's, real estate is not, despite what a lot of people think, it's liquid, to a large degree. But when you're in it and trying to get it to that liquidity event, there's a lot of work and a lot of time that goes into it where it's very difficult to get out of these projects. You just have to keep walking through the process and get it finished.
So all in all, over the next 24 months, slight upward pressure on pricing, too many people coming here, cross our fingers, don't make any big bets.
Yeah, I just, right now, I just don't know what a good deal is right now. And so, and that's really what kills things, is when there's no, I can make money when the markets are going down, or I can make money when the market's going up. Stagnant is difficult.
Well, I can tell you where all the good deals are. William Wright Commercial. That's where all the good deals are. We got some good ones coming for you. Lawrence, we appreciate you taking the time out of your day. We know you're extremely busy. But before we let you go, we got a 6-pack of lighthearted questions we ask all of our guests. We get to know you a little bit more outside of the office. Do you have a few more minutes for us?
I do.
The 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. All right, Melisa, first question up.
First question. Favorite bar or restaurant?
Well, I'm going to give my buddy here. I live in Tsawwassen. My buddy is classically trained chef, and he's got a little restaurant here in Tsawwassen called Illuminati. And Roland Smith has cooked there and owned that restaurant for, I'm going to say 15 or 17 years now. Best food in the city and best value. He used to be the chef at some of the big restaurants downtown, got tired of the commute, and we're very fortunate to have him.
Well, that's going to go on my list next time I'm out that way. It sounds delicious.
Yeah.
So, Lawrence, unfortunately, you found yourself in trouble here. You're on death row. You're granted one more meal. Your arteries no longer count. What is the last meal you're having? Anything you want, anywhere in the world.
Probably start with caviar, and I love foie gras, and then probably into a nice big steak or something like that.
Melissa was smiling there when you were describing that. I think she's going to come join you. Not that we want to find you on death row or not, but
All right, next question. Favorite band?
Ooh. So I grew up listening to 80s hair metal. So, I recently took the kids to see Motley Crue, Def Leppard, and Joan Jett and Poison. So it's probably got to be either Motley Crue or Ozzy Osbourne.
How was the concert at BC Place?
Well, we were actually, funny enough, I bought the tickets prior to COVID, speaking of COVID, for down in Seattle because they were only doing a stadium tour at that time.
Okay.
And we had to wait 3 years to go down and see them and that sort of thing. But when we did, we had a blast. So
Awesome.
Actually, the first concert I took the kids to see, rock concert, I took them to see Kiss at the end of their end of the road tour here. We were row 2, got to go meet Kiss in the behind stage and everything. And so they loved that one. It was great.
Awesome. So it's Friday night. You've had a couple glasses of wine, maybe a bottle. You're feeling good about yourself. Someone gives you a karaoke mic. What song are you singing?
Ooh, probably Fleetwood Mac, Don't Stop. I think it is.
Well, that'd be a good one.
Yeah.
All right, next question. What's a book you recommend all of our listeners read?
Art of War.
Well, that was quick.
Yeah, no, I read that book every time I travel, and it's funny, that's time, COVID. I used to travel at least once a month, and that even if it was just for a quick little weekend. But Art of War, and then there's another book that it's 177 Secrets of. Oh God, the name escapes me now. Anyway, it's quick little read, 1 page sort of every day, and that, and but the Art of War really, to me that's a classic.
Good book. Last question up here. Something you've purchased for $1,500 or less has had a positive impact on your life lately.
I just built a house, so I don't think there's anything during all these high prices and everything. So I'm supposed to know what I'm doing, but apparently not. That's a good question, actually.
We can increase them. Let's go 2,500. You did say caviar as part of your last meal, so we're kind of getting a remnants of what type of life Lawrence has here. So let's go 2,500. Let's go 2,500.
So 2,500. I just I was on a trip in Winnipeg, of all places, to see the Jets play with the Canucks, and a buddy of mine has a cigar and whiskey bar in Winnipeg, so I loaded up on getting my Thermidor all sort of filled up again. So probably about a dozen nice cigars.
Oh wow, good. Well, so I know where I'm going this weekend then.
Yeah.
So Lawrence, how can our listeners find more about yourself, Spire Development, Spire Group of Companies? Where can they go look you up?
Yeah, actually, easiest way is just spiredevelopment.ca. or spirepacific.ca. And then my email address is Lawrence, LAWRENCE, @spiredevelopment.ca. And if anybody's got any questions or that sort of thing, or, opportunities, we're always open and happy to chat with people.
Well, Lawrence, thank you once again for taking the time to sort of dive into more about Spire and your thoughts on the marketplace here. We really appreciate it. And then hopefully our listeners will reach out to you if they have any questions.
Sounds great. Thanks for the opportunity.
Tremendous. Thanks so much, Lawrence. Have a good day.
Lawrence.
Thanks.
Take care.
Melissa.
Bye-bye.
Bye-bye.
And there you have it, folks. Our interview with Lawrence Green, president of Spire Development Corporation.
Great conversation.
Very knowledgeable. Like he's obviously, Spire's been around for 17 years, he said. He was a broker before that. So he's bringing knowledge from the broker sales side of things. He's bringing in knowledge from the asset management side of things. He's bringing knowledge from the development side of things. And now they're bringing knowledge on the development capital side of things. Opened up a window there for people who may not realize you can sometimes invest in these limited partnerships through the financing aspect of it. And he talks a little bit about there. Lots of great opportunity there for people looking to maybe diversify portfolio from real estate into real estate lending, which obviously with the high interest rates have probably been pretty lucrative as of late.
Great information from Lawrence today.
And because the interview was long today, Melisa, let's not tie up any more people's time more than we have to. How can our guests get a hold of you if they ever want to find out more about residential real estate?
Yeah, absolutely. They can call me at 778-869-4477 or email me at melissa@vancouverrealestatepodcast.com. And Cory, how can they get a hold of you?
People can reach me by email, cory@williamwright.ca. They can call our Vancouver office, 604-428-5255. Let us know what you're looking for. We'll put you in touch with the best broker throughout the province to service your needs. Or they can visit our website, williamwright.ca, sign up for the latest and greatest news. And that's all we have today.
That's it.
That's it. Thanks for listening, guys. Another great episode next week. Take care.
Subscribe today.